Welcome to the weekly roundup for the week ending Friday, the 21st of August. So it's been a mixed week in the markets. We've seen that European bourses and the Dow are looking to end the week on the back foot, whilst the S&P and the Nasdaq are looking to have weekly gains. Now, this is basically after the Federal Reserve and the minutes from the FOMC highlighted concerns by policymakers over the health of the US economy. And that's seen investors move back into this tried and tested practice of buying into big stock as big tech stocks as a form of safe havens, even if you like. So this week we've seen the Nasdaq climb 2%. We've seen Apple reach a 2 trillion market valuation, the first company to reach 2 trillion as a market valuation. And we've also seen the S&P look to gain across the week around 0.3%, and that is thanks to the tech component of the index. The Dow, meanwhile, is looking to trade at around 0.6% lower across the week. The DAX 0.1% lower, and the FTSE has lost over 1.3% across the week. Now, the reason that the FTSE has done so badly compared to its European peers, for example, is because of the value of the pound. Now, the pound has jumped over 1%. So what that means is because the FTSE 100 is made up of multinational companies who earn profits and revenues abroad, a stronger pound is actually a less beneficial exchange rate for them. So that just drags on demand for those companies. Now, the pound is up over 1%. I said it did reach a high, a 7-month high of 132.68 across the week. And we've seen basically the weaker dollar has had a part to play. Dollar weakness continues to be a story as concerns remain over the strength of the US economy, as I said. Also, inflation in the UK jumped 1%, much stronger than expected. And also we've seen retail sales rebound again. So this is, really painting that picture of a stronger US economy as we come out of the lockdown and as lockdown measures are eased. However, there are concerns that these figures are actually masking a deeper underlying problem, which we're going to see now as the government withdraws from the job retention scheme between August and October. So we could actually see now these sort of solid, impressive numbers starting to look a bit weaker. So that's the reason that the FTSE is really having a down week compared to its peers. Gold has been a big story most weeks. This week, not quite so much. It's staying around that 1,950 level. It's just down around 0.2% across the week. Now, as far as stocks are concerned, Persimmon has been a highlight. It's up over 6% across the week. And this is after it's reinstated its interim dividend. Now, it's only 40p, but that's down quite a lot from 125p last year. But it's painting the company in a good light, the fact that they have reinstated their dividend, because dividends are definitely hard to come by right now. And so investors are cheering that, and that's even though completions were down 35% in the first half. Retailers have been in focus this week. Now, Marks and Spencer's at the beginning of the week announced 7,000 job cuts. Now, Marks and Spencer's has been in trouble prior to coronavirus, but the coronavirus lockdown has magnified the problems there. The food side is actually still doing well. Sales were up there around, revenue was up around there 2.5%. However, clothing and home revenue down 38%. So, there we can really see the problems that the company is facing. Stocks trading down around 2% across the week. On the other hand, Frasers has been an absolute outperformer. So this is Sports Direct owner Frasers. They've jumped 25% across the week after their long-awaited trading results, and they were actually better than expected. So pre-tax profits were down 12.9%. As I said, this is better than expected, and given the challenging circumstances and environment they're facing, this was well received, as was a revenue increase of 6.9%. So as I said, investors are really cheering, and we also had a positive outlook from the firm, which has helped push the stock higher. Thanks very much for watching. Have a good weekend.